Okay, I'll be back.
Hey, everybody. Welcome. This is Insurance Hour. I'm here with my friend Kathy. She's an insurance expert. So we're going to give just a minute for some people to pop on. We are streaming today on Instagram, LinkedIn, and Facebook. We're super excited. So today we're going to talk about insurance. We've got a treat for you. I don't know about y'all, but my insurance premiums, I actually have one of my investment properties financed with Kathy, or home insured with Kathy. It went up. Of course, I called Kathy and she explained to me why. And my house insurance on the house where I live went up as well. So the big question I know you're all asking is, why is my homeowner's insurance going up? Can I get lower insurance? What's covered even on my insurance? Like, insurance is the biggest misunderstood thing ever.
It is. It's very complex. Just when you get it right, just like tax code, it changes again. So from year to year, that 85 pages and all of the verbiage and what they do and don't cover changes. So just as soon as you get it, it'll change again. But it is very complex. And I always say, if you have trouble sleeping, just grab one of those policy packets and start reading, because it's very, very difficult.
You know, it's funny you said that. Actually, last night, I really couldn't sleep. I was at a conference in Florida. I was on a plane this morning at 6 a.m. and I could not sleep. I should have had a homeowner's insurance policy with me. I did binge on my favorite Netflix for a little bit and I got tired.
A little easier.
But we're talking about insurance. So please ask us questions, chat. We're watching the chat. So today Kathy and I want you to understand just the basics of, do I have the right coverage? Am I in the right place? If you need to shop for insurance, we're going to give you some pro tips on what to even ask or where to even go. These are probably some questions all throughout your mind. And we have a bonus at the end where we're going to talk about what really is covered in your policy. I think there's a lot of mystery about that. Like, we're all just gliding through life paying these premiums and we don't really know. Like you said, the 85 pages.
Right.
And so bonus round at the end. So you want to make sure to stick around the whole time so that you can watch that. So Kathy is here in Texas with me. We're in Houston, Texas, but Kathy, you can insure all over Texas, right?
All over Texas and only Texas. So
okay.
Doesn't matter where you are, if you're in the city or how rural you are, if it's half an acre to 30 acres or 50 cattle, no cattle, we can certainly help you.
Do you do commercial too?
We do commercial as well. We do vacant land. We do course of construction. We do flips. So pretty much any property, we've got a place for it.
Awesome. So if you're watching this, we're going to have Kathy's info. Of course, it's going across the screen. We'll also have it in the notes. But if you're outside of Texas, we're going to have some good information here on who you can call if you're not sure what to do. So let's get into it, Kathy. Why are premiums skyrocketing, like almost double for some people?
At least double for most when we look at what our rates were about 2 years ago. And, I've been doing this for 20 years. And what I've seen in the last 2 years is unprecedented. Not just doubling. We have some who have tripled. We have non-renewals. We have closed zip codes. And the short answer is this. There's three main functions of that homeowner's policy. Of course, it's to repair and rebuild your house. We all know that. It's also to replace the belongings that are in your home. And hopefully this doesn't happen to you, but sometimes we are reimbursing people for injuries that they may have sustained. So out of those three things that I've mentioned, which one has become less expensive in the last 2 years, right? When we look at things like the cost of materials, inflation, the cost of labor to have those people help us put our homes back together, all of that has skyrocketed. So to think that the insurance carrier is going to be able to absorb all of that inflation and not forward it on to the consumer is unrealistic. So just as those rates have doubled and tripled, we have to forward that on to the client as well. Unfortunately, we all feel it. You're not immune to it, myself as well.
No, we've all. But now, doesn't also something play a part into it in just claims like floods, tornadoes, I know in California there's fires, right? And so all
Mhm.
over the US, I've heard from people even in other states.
Mhm.
If you're watching this and you're not in Texas, it's going up in other
It's
states as
very
well.
true. So that answer I gave you was enough to double and triple our rates, but then you add something like the freeze that happened in Texas, the fires in Hawaii, a
Oh, wow.
hurricane up the East Coast.
Hmm.
We all will feel the weight of those payouts. And it's spread sometimes evenly and sometimes not. So that's very true. It is a nationwide issue with inflation, but it's still our issue when it comes to why our rates are raising. It could be Florida or Hawaii or something
Okay.
else.
So what about a lot of people ask, do I really have to even have homeowners insurance? Like, is it even necessary?
Yeah, so two different questions, right? It is definitely necessary. And for those of us, or for those of you who are part of the wonderful group of people who officially own your home, meaning that you no longer have a loan, you
Okay.
haven't done a refinance for whatever reason. If you own your home, it's your decision. And of course, sometimes we have that conversation with our clients where they may say, you know what, I don't even have to have this coverage anymore. Perhaps I should just self insure. And so our answer to our clients is always going to be, you could, and it is your choice, but does it make sense, right? When you think about your $500,000 home and the fact that we're willing to rebuild it for you for just $3,000 a year, is the trade off worth it to you? Does it make sense to you to rebuild your house completely out of pocket just because you can? And I
Hmm.
think, again, the frustration that most people feel with rates, it's totally understood. But at the end of the day, we can't be too short sighted with this. It's not about if you'll have damage, it's when. And
Yeah.
unfortunately, we just don't have the crystal ball. So it is important for us to maintain the responsibility and put our family in a positive place where we're protected.
No, that's a great, super great insight. Now, if you have a loan of any kind, it's mandatory. So
Mhm.
can't even, I mean, the lender will not let you be uninsured
That's
at
right.
all.
Not your
So
choice at all.
yeah. Now, how about when you do insure, do you have to insure for the home's full value? Like, how does that work?
So that's a really good question. And occasionally we get asked that. Well, I know my roof is old. Can we just exclude the roof? Can we just start picking apart the policy so that we can bring the cost down? And the short answer again, most carriers will require that they insure to value. See, what you may not know is that in homeowners insurance, there's just a few official legal policy forms that are filed with TDI. Our contract states for that HO3 that we will insure your house to the full value. It's the way the policy reads. So we cannot, as agents, knowingly go below what we know to be the insurable value of your home. So, are there ACV policies where we pay depreciated value and we insure your home for half of the value? There are. Very few agents will write these. It's not going to put you necessarily in a great savings either. So you're still paying quite a bit for those. And our goal is really to find affordable coverage for you, but making sure that it's going to be there for you when you need it.
Okay. No, that's a great insight. Now, when you have a loan, I could tell you from the lending perspective, we are going to want the full replacement cost to be valued. Now, it used to be probably about 6 or 7 years ago, we could actually get away with the loan amount. So, like, let's say your replacement cost was 500,000, but your loan amount was only 400,000. In the past, not now, but in the past, you could just do the 400.
Mm-hmm.
But now insurance companies are like, there's no way we are not insuring you for less than the replacement cost. Like, there's just no way. So it's really changed. So if you haven't bought a home in a while, you might be also catching up to some of these guidelines.
Well, and we get that question too. And anytime you see a change in insurance, it's because there have been losses related to that. So going back to that client, we used to be able to say 400,000 because that's your loan. But remember that contract? And the
Yeah.
contract said that we, in our professional knowledge, are insuring to full value. and we didn't. So we broke that contract. So in a court of law, the carrier will always be the one held responsible to stick to our contract. So they just lost too much money and they didn't collect the right premium. So now there's just an across the board rule.
Okay. No, that's good information. So let's say, Kathy, I mean, I shopped my insurance this year. I renewed in August. I did wait. It took me about a month. I mean, I was scrambling. Like, I called you. You were very honest with me and said, Jen, you're good where you are. With me, it would be higher. I checked around. I found someone actually that insured me for actually a lot less. So that's not the case with every carrier. So what I do want to state, and Kathy's going to tell me if I'm wrong, but I think I'm right from what I see here on the mortgage end, different carriers have different rates and premiums for even like different sides of the highway based on policy claims, tendencies, especially we live in Houston. And so it floods. And so one part of the city might flood more. Is that right? So where I'm with State Farm right now, and they're definitely the cheapest, it might not be the cheapest for someone who has a different type of property, if that makes sense. Is that right?
Absolutely. And essentially it's called an appetite. You know, every carrier has a desirable book that they want to grow. Maybe one carrier really likes homes that are below 3,500 square feet. Maybe there's another carrier who really aggressively wants to go after new construction homes. So their price point for that new construction home can't not be beat. If there's a home that's, you know, over 60 years old, I doubt that there is a carrier who's trying really hard to earn that business, but there will be a carrier specific to that type of clientele or that type of home. Definitely location. Rates are always based on location as well. And so just think about rating. They're either trying to earn your business with their rate, or they are trying to help you find a better rate.
You mean they're trying to say go somewhere else? That's what they're trying to
Without
say. Okay.
Legally being able to say goodbye or non-renewed.
Oh, I got it.
We'll have that discussion with our clients, because sometimes, Jen, if your rate goes up and it goes up just below everybody else, that was intentional. The rates are public knowledge. So your insurance carrier knows what this insurance carrier is charging.
Okay.
So when they stay cheaper, they did that on purpose.
Oh, that's okay. Yeah. Cause when I was shopping around, one of them was like, I was almost doubling of what was already doubling. And I was like, you guys are nuts. Like, you're crazy. But they were politely telling me they didn't want my business. Okay. I got it. So let's say that I'm shopping around, and you should, by the way, I think that 2 months before your policy expires, so know when your renewal date is, you should start shopping around, because it takes a hot minute. Like, it took me a good 45 days because it wasn't the thing that I really wanted to do every day. And so, like, let's say I don't even know who to call. Like, how do people even know who to call?
I think one important source would be your own circle. You have neighbors, you have friends, family. You know, we're all very similar. So homeowners know homeowners. I think that's a really good place to start. Referrals are obviously a huge part of our business, and we'll eventually get the entire family. Hey, I'm referring my mother-in-law. Hey, I've got my daughter that's buying the home. So that's a really great place for you to start. If your family member has a good experience with this agent and they've been with them for years, it's an excellent place to start. And then, of course, I'll always refer you and recommend independent agents. It takes a lot of time. Like you said, you're a very busy person. I can't imagine taking time out and doing something like this. These clients that are able to sit and talk with me 30, 45 minutes. I could not do that in my workday. Personally. So it takes time. And if you can find someone who's able to run 7, 8, 9 different quotes for you, you know, give that work to someone else that you trust and allow them to explain what is the range of the options they're finding for you.
So that's the difference between, like, for example, some of the names that we hear, like, you know, there's Geico, there's Progressive, there's State Farm, there's Farmers. So it's like going to them directly, almost like in lending. You could go directly to some of the big banks, or you could come to someone like me where I'm shopping all these people behind the scenes. It works the same way. So you're independent, right? You're an independent broker, and how many different ones do you shop? Like 9, 10?
Yes, on the home side, I've got 9 or 10 that we should be able to use and be able to quote for you. Again, like we talked about earlier, if there's something real specific about your home, like a 20-year-old roof, or the house itself is over 60 years old, then we already know just from all of our experience where we're going to narrow this down and where we should be most competitive. But yeah, absolutely. Having more carriers is just more options. It helps us serve you better. As some of those that you named, these are captive. When your rate goes up, there is nothing they can do other than snip away at coverage, and we don't necessarily want to do that right away.
So are there companies that are known to be always the cheapest? You know how sometimes in airlines, and I'm not going to call anybody out publicly, but we actually flew them over the holidays, and I said, no, this time it's not going to happen. And of course we were delayed. My family was like, Mom, but I'm sure in insurance, it's the same thing. Are there carriers that are notoriously cheaper? And then,
yes.
Okay. So when that happens, okay, I can
like
tell.
You said, we're either gonna. So I try to tell people this with many parts of what we'll be talking about. Pay now or pay later. This is the decision we all have to make, right? Even if it is a solid carrier, even if I found a great carrier, great rate, we still have to make decisions with deductibles and things like that. Pay now or pay later. It's the same with one particular or two particular carriers. Talk to a couple of roofers. That's a good start. Ask them, who is the one that just never says yes? Who's the most difficult carriers for you guys to get approvals from?
So that's what happens, is that they don't approve stuff?
Absolutely. So the carriers that are able to charge less, there's two things. Don't think that their CEOs make any less money than the carriers who charge more, right? Where the money is coming from is in the percentage of claims that they approve. When approved, how much do they pay? And then of course, it's going to be in other areas like coverages altogether. If you call me and you name one specific carrier on your home that you have right now, I'll immediately push the keyboard away and we're going to have a talk. You're calling me with essentially I don't want to offend anybody, but a very tiny little car. And you're asking me to get you an Escalade for the same price as that car. It's not possible.
Okay.
So if your sole purpose is calling me today is to beat the rate of that little bitty car, I can't.
So, but for some people though, like there's a lot of people on fixed income and they can't, people are like, property taxes are going up, homeowners insurance is going up. So when it's a matter of like money out of your pocket, there's some people that they are just, they have to make that decision of the lower,
You're
of the lower
100%
premium.
right. And I don't want to minimize that either, because anyone who owns a property is feeling it from every single angle. And things like your appraisals, which are causing you to pay more in taxes. And then of course you have the insurance. Even owning multiple properties such as yourself, you get hit multiple times from all the areas. So I definitely don't want to minimize that. I will say this time and time again with my own clients. I would much rather see you take a solid policy from a solid carrier, and let's work to see how we can minimize the cost of that policy and get it really close to this bad one over here that is going to leave you high and dry come claim time. It's the same with flood. When you have the flexibility and you can choose to get it or not get it, there's a lot of things we can do to help reduce that flood cost. So I love to sit down with people and say, all right, let's talk about what's most important. Do you need to buy all your socks again? Do we need all the VHS in the garage? No. So let's take a look at some personal property. Let's see what we can do to reduce it. But what you don't want and what I do not want for you is come claim time, you being completely denied because you chose a policy that did not offer that coverage, and we could have done better for you. We could have gotten close to this rate and made the solid policy more manageable and affordable.
So we're actually, when we get into claims and what's covered, we're going to talk about that. But before we do, I want to just wrap up and talk about some of the top ways to be sure that you get the best homeowners rate. So like, let's say you're on your way to shopping. So you want to start writing, you want to write these down, y'all. You want to have a pen in hand and make a note to just a few basic things to make sure that you're getting the
with
best rate?
yours.
What would be your tips?
I'm going to say the first thing that we require is we all need to grab what you have right now. We need to take a look at what is the exact policy that you have. What have you agreed to in the past? What's been important to you in the past? Or did
Okay.
you just take it when you were closing on the home? Because if I can't beat the rate and I can't help you, the next thing I will do is go back to what you have and say, listen, let's take a look at this. You can go back to your agent and let's talk about potentially changing this, this, and this. That should save you a couple $100 for the year. So the most important thing, it has to be 100% replacement cost. Kind of goes back to the question that you asked earlier.
Okay.
I'm really big on pipes, sudden drips, slow drips, things like that. That's very important, and it's extremely costly. And it happens. 20 years into this, pipes is a big deal, and it can be extremely expensive. So those are probably my big ones, just making sure that you have the right coverage. And roof, I mean, we're going to talk about roof till we're blue in the face.
Well, we're going to talk about that in a minute on coverage, but when I'm like, for example, if I'm trying to take some shortcuts, or not shortcuts, but some things to try to help me get lower insurance. Like I heard that auto, for example, if you bundle your auto, does that every time come out with lower insurance?
No. So if you think about the most recent bundle commercial you saw, I can think of 2 or 3 that are real heavy on the commercials for bundling. They actually don't even offer the other policy they're talking about. So we have, for example, auto only companies who go on and market as if they can bundle. And the reality is they've just partnered with a home only, an auto only went to a home only and said, hey, let's make a deal so we can kind of make money with each other. And it's a fake bundle.
Okay.
So I, being able to write all the different auto carriers and all the different home, I have no benefit to make you overpay for one so you can get a bundled discount. So more often than not, personally, I find that I can get you the best auto rate with this carrier and the best home rate with this carrier. And together, the math is far less. The premium is far less than if you would go with a bundle with one particular company. And sometimes, Jen, you'd be surprised, people kind of get caught up in that math, and they'll say, well, but my home guy said I'd save $600 on my home if I move the auto. And I'm like, but what's the total? We got to focus on the total. So there's no other benefit unless it's mathematical. So we do take a look at that. And some of our carriers offer bundle, and we're checking for that. We're checking every possible scenario to get you the best rate.
So this brings me to a question. It wasn't on our list. We did a pre-list of questions, and she said, don't ask me anything not on the list. I know. Don't itch. Listen, like, I know I'm lucky enough to know several insurance people, and I actually went with someone that I didn't know, and it broke my heart not to move my home to you, but yours were just higher. I mean, it's just the way that it was. But how do I know who to trust? Like, let's say I call an insurance person. Let's say that you watching, you go and you call, you ask a friend, hey, who are you with? Who should I call? They give you a name, you call this person, and they're starting to poke holes and point in the policy that you have. Like, how do you know who to believe, or if there's just a sales pitch, or like, how do you know?
I think you really have to go with your gut. And it goes back to, are you just cold calling agent after agent, waiting to see who's giving you the lowest number?
Okay.
Because you'll find one who says, what's the best rate that you're getting? 2,000, no problem. I'll get it for you for 1,000. That's a problem. So trust your gut. Have these extended conversations. You're either going to feel really good. I can't tell you, and I don't mean to toot my horn, but people often after we talk will say, I can totally understand why Jen referred you, or I totally understand why my realtor referred you. I really appreciate the time. You'll know when you talk to someone if they're passionate about what they do, or if they're trying to make policy. And I know for sure you will not have you'll really believe that it doesn't matter if you call us back or not. It does, and we want to help everybody, but we're not in it for the numbers at all.
So go with your gut, and I think it's refreshing to have someone that's you're going to know those people that are really taking the time to explain it. Anyone that I refer, like, they super explain and they're very thorough on that. But okay, that's good advice. So we do have a question. Thank you from Instagram, I think. Galleria Guru. Thanks so much. Do you insure a house in a self-directed IRA? Because, sometimes people buy real estate with self-directed IRA, but I would think it doesn't matter.
Yeah, so normally if it's not going to be in the name of an individual, that's going to be a carrier by carrier basis. So it's going to come down to the occupancy as well. So if we have someone who is using this as their primary residence, that might fit in one particular carrier. If it's going to be a rental property or vacant, obviously, then we're going to need to insure it somewhere else. So that one, like most answers are, it depends. And some carriers will accept it and some will not.
Okay. But there are some, I'm sure.
Absolutely.
I mean, it doesn't matter who finances it behind the scenes. A self-directed IRA, a house is a house is a house, right?
That's right.
Okay. So it just may be restricted by some carriers, possibly. Right. Okay, cool. So now we're going to get into coverage. So we tickled on it on the beginning, and now we're going to get into coverage. So if you're wondering what's covered and what's not, so my story that I love to tell is I was unsure several years ago. I think it was like 7 years ago now. So I have a big fish tank in my house. It was there when I bought it. I did not need a fish tank when I bought the house, like a hole in my head, but it leaked. It leaked all over my house. Like it got a crack in it. I don't know how or why. And there was water everywhere, 500-gallon fish tank. So we were scrambling. I had no idea what to do because, when you're in crisis mode, you have no clue. And so we called our insurer at the time, and it was a piping issue. And you mentioned pipes. And so I'm glad to say at first they weren't going to cover as much, but then they did cover more. But it was really a pain to understand and know that 85-page document that nobody reads. And so we're going to talk about some of the basics that are covered in a policy and what's not. So, Kathy, are you ready?
I'm ready.
Okay. So my first question is, what are just the basics? Like, what's the boilerplate that's covered on a home insurance policy? And you mentioned the word, I think people didn't understand maybe what it was, but you said HO3. So is that like a basic terminology for
That's right.
basic policy?
Yes, ma'am.
Okay.
So there are basically two major divisions to keep it super simple. There's two major policy forms that you can purchase in Texas. And I think we actually talked about this last time. One is a named peril, and it's called all kinds of things. And that means they're going to specifically name the 12 things that they do cover. And if you end up having damage and it's not one of those 12 specific things, such as an aquarium is not one of the 12, then you'll be denied.
Yeah.
There's no coverage afforded. The better of the two and the more comprehensive of the two is that HO3, and it's an open peril. So they actually say the opposite. We'll cover everything unless we said we don't. And I know it sounds funny, but that exclusions list is the same across carriers. So we all know at this point that flood is excluded, wear and tear, poor workmanship. Those are your big ones. And then earth movement, earth shifting, earthquake. So that's really where those two forms will differ.
So I have a question then. So poor workmanship, like let's say my house, when we moved in our house, we were the third owner. And so the house was way past any builder's 10-year warranty or whatever. And we had a few things happen that we uncovered, like we were like 15-year in owners. Okay. And, hang on, my camera's moving. Hang on. We're going to move it right here. Hang on, guys. All right, there you go. Oh, now it's even worse. Okay. There we are. Hey, there we are.
Wrong way.
Hi. What was I even talking about? I don't even know. I was then
poor workmanship.
So there's poor workmanship on a couple things in the house, and like it wasn't my fault, but like we had to pay to get those things done. Like it was horrible.
Right. So that'll happen, and essentially poor workmanship.
Hey, there we are.
Essentially,
there we are,
poor
right there.
workmanship. Yeah. What is a good example there is if you cut corners. Or perhaps you hire, what we call chuck in a truck, a roofer who's going around, all of a sudden a roofer, and he is offering the lowest rates possible on replacing your roof, and come to find out he just makes a big mess up there. He perhaps doesn't rip off previous decking that was soaked, or he's leaving shingles missing. If you choose, so this wouldn't really apply in your example because this was many years later and the house is just kind of starting to fail. But in this case, if you're choosing a roofer and they do a horrible job, well, you can't call us and ask us to buy you a new roof. right? We will fix the damage that resulted from that unfortunate roof job. So if all the shingles that were missing, we've had a claim like this. There was a big section of shingles missing in the back slope of the house that nobody saw. That was a fresh roof that a roofer had failed to do properly.
Oh, wow.
So we did fix all of the damage from the water getting in that section, but we did not pay for a brand new roof for that client. She was
Okay.
paid the first time and then didn't necessarily have good luck with who her choice was. So that's what we mean by poor workmanship. You can't go and do a bad job on your house, and then when it fails, ask us to do another job. That makes
So in Texas, where we are in Houston, especially, we have a lot of hail.
Mm-hmm.
And so here, so my question is, because I get this a lot and even think this a lot about, does basic coverage cover your roof? Now, in the question of hail, I know that it does because I live in Texas and I know people that have done that. But like, how does that work?
So that's a super loaded question these days because roof is just a 4-letter word. So carriers over the years, and we mentioned at the beginning that, over the last 2 years, just a lot of stuff has changed. Yes, hail is covered, but the deeper question is to what extent, right? So one thing we want to ask is, do you know what those deductibles are for wind and hail? Did you, you may have picked a 1% 2 years ago. It's not a 1% now. So do you even know that? Have you taken a look at your renewal offers? And then, of course, the really important question is, how old is your roof? Because while hail might be covered, if you have a 20-year-old roof, they're only going to give you 30% of the value of that roof. Then we subtract your 2% deductible, or 3% this year is what I'm seeing it go to. And now that full replacement cost has been reduced, and then we subtract a deductible and you're getting a check for $500 to replace the roof. And the last thing that's super interesting about that and kind of ties into that claim is, how long did you wait to report that claim? So if you're calling me today in April about a hailstorm that happened back in August, we now have a different issue.
Suspicious.
Well, not so suspicious, but they now do not have to pay you at 100% replacement cost. So most people don't know that.
So yeah, because there's roofers out there. In fact, I had one that came to me last year because we were thinking about getting a new roof, and we got some quotes. And I think it was like October or September. And he said, oh, hey, we can claim there was a hailstorm in April. And I was like, that doesn't sound right. Like, this is like 6 or 7 months later. Needless to say, we didn't do it. But there's some roofers that want to capitalize on that, right?
And, if it's within 6 months, it's okay. So depending on that window, it would have been all right. And technically, the statute of limitation in Texas is 1 year. So you do have an entire year. You're not climbing up on your roof every day. So that, what you just mentioned, it can happen. It might take a neighbor and then another neighbor getting their roofs replaced before someone else is up there and able to see. Here
goes the camera again. Here, let's move over here. Come over here. Come over here.
We should be standing.
Yeah, we should be going like this. Okay. That's better. Don't move. So what about HVAC? Air conditioning. A lot of people ask, like, hey, my air conditioning goes out, and does insurance cover that?
Great question. So the important thing to know about appliances, all of them all together, including HVAC, is that the insurance company fixes the damage that results from your faulty appliance, but we do not buy you the new appliance. Better example here is maybe the dishwasher. You turn it on before you leave for work, you come home and there's water everywhere. We're going to fix all of the water damage, baseboards, flooring, cabinetry, but we're not buying you a new dishwasher. So that's where the home warranty comes in, and that's not something that we do, but we obviously, you and myself, can refer. There is, just when I convince you, an endorsement now that you can add to your homeowner's policy, and it's called equipment breakdown. Very inexpensive. A tenth of what it costs to have a home warranty. And we will now cover the HVAC that you just mentioned. So if it's the middle of summer and the AC just breaks, then you actually can file it on your homeowner's insurance if you have this endorsement.
Oh, wow.
And we buy you a new AC unit.
Yeah, those are
tens of thousands.
Yeah, no,
they're
now in today's prices, they're like $12,000, $13,000.
Very expensive.
Yeah.
But like I was just telling someone yesterday,
It's moving again.
you don't want to file that claim for the dishwasher. That's just
Yeah.
a couple hundred. You're
It's too
expected to
much.
be able to pay something like that. Don't forget the claims are chargeable.
Mhm,
So if you're going to call and file the claim and we're going to help buy a new AC unit for you, it is chargeable. So your rate is going to go up a little bit for the next 3 years. So we just want to be real careful with how often we use something like that.
Yeah. If it's just a few $100s for a new dishwasher,
call.
do not
Right.
do that, because your insurance will go up,
Mhm.
people. And that's another question, actually. So like when you claim, I mean, I've heard even homeowners companies, and I haven't had that many homeowners insurance claims, but like on car insurance. And I'm like, is my insurance going to go up from this? And they're like, no, it's not going to go up. And I'm like, you be lying to me right now.
They sure are. And
Of course it's going to go up.
I don't know why we would lie about that.
Yeah.
We definitely want to prepare you. So
Yeah.
if you've not heard this before, okay, now we're on me.
Oh, hey. Okay.
If you have not yet been told, I'll be the bearer of good news here.
Oh, God.
All claims are chargeable. Even your not at fault auto accidents are going to make your rate go up. So we want to, again, be very careful with when we do and don't file the claim. On the home side, all claims are chargeable, meaning they will all make your rate go up, with the exception of weather. Sometimes a carrier will not hold it against you that you have filed a hail claim. However, file a hail claim every year for 2 to 3 years, and now we may have an issue.
Yeah, you're a high risk.
Right.
You're a high risk. So you had mentioned before that flooding is not covered, but if you're so again, living in Houston, Texas, we flood. And so my suggestion always is definitely get flood insurance, because it's cheaper when you're not in a flood zone. I think now, haven't they changed to where even when you're not in a flood zone, you could have a higher premium than just kind of a flat boiler rate, right?
Absolutely. I see homes not in a flood zone, mainly when we go more to central Houston and closer to the water. I see non-flood zone homes as high as $3,000 now.
Oh, wow. So that's a deterrent, though. That makes people not want to do
it's
it.
Very difficult. So then what happens in the end when they do
you
suffer the flood damage,
Yeah.
then they actually get to loan you the money at a percentage of return. So
yeah,
I don't want to say it's all intentional. The reality is this, Jen, if you and I both live in a non-flood zone, and I'm in Fulshire and you're in downtown Houston, the reason why yours is 3,000 is because you're closer to the water. It's a very big body of water.
Yeah.
And we believe that you're probably going to collect on this. You're more likely that they're going to have to help pay that claim.
Okay.
If we are in West Houston and there just isn't a body of water, I can pay only $500. They feel pretty good. I'm going to pay $500 forever and never ever have to file a claim.
Yeah.
So I tell people
Depends on location.
That's right.
Yeah.
It is unfortunate if you're buying a home and you want flood insurance and it's very expensive. We'll work very hard to try to find a better rate.
So a lot of people will say, well, because if you're getting a loan and you're in a flood zone, we pull the maps and you're in a flood zone, it's mandatory. You have to have flood insurance. And the premium, from what I understand, my knowledge, is that it's based on your elevation. So we make you get an elevation certificate where the surveyor says, oh, you're this much feet above the floodplain, and the farther up you are, the cheaper your flood insurance. But a lot of people say, hey, I'm in a flood zone, but the house is never flooded, so I should pay less. And that's true or not true?
Well, I'll say the reverse. If you have a flood claim, your rate will be higher. And that's true whether you're in a flood zone or not in a flood zone. So I agree with the argument, but it's the same argument, me and my house and Katie, I've never filed a homeowner's claim, but my rate went up just as much as everybody else's.
Yeah.
So we have to keep in mind that your own rate is not just about you, your behavior, and your claims history. It's about everybody else, which kind of takes us back to the previous discussion. Nationally, we can be affected by someone else's claims. So I definitely understand that concern. And being in a flood zone, yes, that means you're required to have it, whether you believe you need it or not, whether you want it or not. We just have to make it as affordable as possible.
So bottom line about, we're going to center the mic so y'all can hear us better. Bottom line about coverage then, and what is covered You mentioned 12 named perils,
Mhm.
which would be kind of some of your basics, right?
Mhm.
Like water damage, if it's
Mhm.
caused
We'll
by.
see what you know.
Okay. Well, I don't know if I can do all 12, but okay. So a named peril would be a fire.
Mhm.
That's the basic one. It would be wind and hail, right?
That's 2.
So wind damage, like if it blew my shingles off or whatever. It would be pipes, like pipes bursting or leaking.
Very good.
Does it include pipes like in the ground that are in front of my house,
Great
going to the sewer
question.
line?
Anything underground always excluded.
Oh man. Now that hasn't happened to me, but I've known people that it's happened to.
Which takes us to the pool, which is also underground and excluded.
Oh man, I shouldn't have even brought that up.
Yeah.
But I'm only on 3.
Yeah.
Oh my God, you said
I
12?
tell people the named peril,
That's
again,
like hard.
some big commercial spots, that's all they offer is the named peril. It's all the stuff you could possibly think of. I don't know that I can say the 12, but fire, theft, vandalism, hurricane, hail, wind, lightning, smoke, pipes, and I'm on 9. So again, if you're hearing that, it feels pretty good. But what isn't covered are that slow drip. A lot of freeze has been excluded from some of those. Sometimes liability is not in some of those. That's important. So
freezing. Well, so when pipes have frozen and then they burst, it doesn't cover like the pipes burst and you
some of
get
them
flooring
don't.
damage.
Some of them have no pipes at all mentioned.
Oh, so you really have to go over that with in different carriers because it's embedded in the 85 pages. Oh my goodness.
Yes. And what that quote sheet looks like, all of our quote sheets look the same. Coverages A, B, C, D, E, and F. Deductibles, premium. And they all look the same. So I know as a consumer, it can be really confusing.
Oh my gosh.
And you feel like you're comparing 2 apples, but it isn't. And so you do want to find a trusted professional who can help you. Who
can tell you. Because like that's not my business, right? Like I know mortgages like the back of my hand, or someone who's a scientist could call you and they know science, but like they don't know homeowners insurance. So that's why we always, we're 100% referral lending. And we tell people, like you said in the beginning, like start with your sphere and the people that you know, because they already have a trusted relationship with the person that they do. It's always a good place to start. And they're going to shoot me straight. Like you shot me straight when I called you, you just said, Jen, listen, you're better off where you are right now. And so I ended up looking somewhere else. I finally found it. But when I tell y'all I had to find a needle in a haystack, like I think I called just about every carrier, literally. And it's hard. So you got to like get your piece of paper out and make a T-chart and just start calling. But so lastly, I just want to know, because I did get this question, are claims tax deductible? Like if I have damage on my house, can I write stuff off on my taxes? Do you know the answer to that?
That's a really good question. And there have been some years that you could do that, just depending on the severity of the catastrophe and whether it was declared a national catastrophe or not. So of course, any tax related questions will always say, refer you back to your CPA.
Yeah.
Hopefully you have someone that you worked with for a long time, and hopefully they're asking those questions. Anytime there's something really big that happens in our area, they're going to ask you if you had any claims related to that particular storm. If yes, then they'll collect those receipts, and it can quite often help you on your taxes.
Yeah. And I know also from a property tax standpoint, you might be able to, the year that it happened, you might be able to claim that. So again, we're not giving you tax advice, but we're just kind of trying to point you in the right direction. So on your property value, again, with the county, you might be able to use that as a reason to pay less property tax, but only 1 year. You can't do it year after year after year and be habitually doing that. The last thing is, someone asked me, are the claims, like let's say you receive money from a claim, like in the claim that I had, it was like 70 grand. It was $70,000. Is that taxable? Can the IRS tax you on that?
Do you tax you on that as income?
Yeah.
I am going to tell you, without my tax licensing, no, it is not taxed as income. However, you just need to run that by the CPA.
Run that past your CPA. Yeah. Do we look like CPAs?
Them,
I don't think so.
We are wearing
glasses though. Yeah. We know very little. Okay.
That's right.
Well, listen, guys. Thank you for joining us today. Please forward this to someone that needs it. We've covered a lot of ground. I'll put Kathy's info in the notes. You can always find me, Loan with Jen, all my handles, my website, everything, Loan with Jen. If you're in Texas, please call Kathy. She's amazing. And if you're not in Texas, use some of the guides that we gave you and ask some of your friends for some trusted referrals in your area. So take care. Talk to you soon. Let us hear your comments. Comments, like, and share. Thanks, guys.
Thank you.